Hey folks, it's Vic Noble here with your weekly trade example for the week ending April the 27th of 2012. You know, I really wasn't sure what to do for this week's trade example slash lesson, but I think sometimes it's better to have a chat, well, a one-way chat anyway, rather than just showing charts and trades all the time. And I have something today that I hope you'll find beneficial. I've just answered a whole ton of emails, which kind of led me to this. And after answering all these emails, I must say I find it very interesting that two different people are shown the same trading method. One goes on to nail it and do very well, and the other struggles. Now, I know that it does take different amounts of time for different people. That's normal. But doesn't it make you wonder what the difference is? Like, two people could trade this chart from all the way from here up to here. This is hourly charts, and these are each day. And one could really do well, make a lot of money, and the other one could lose a lot. What's the difference here? I'll tell you a quick story. I remember back in the early 1990s, can't remember exactly when, but I was at a seminar. It was a futures trading seminar. There was a guy there named Jake Bernstein. Maybe you've heard of him, and he was presenting part of it. And I remember him telling about the psychological profile of people who seemed to do really well in their trading versus those that had problems. And what always stuck with me was that he said the ones that did the best didn't think very deeply, or words to that effect. In other words, they didn't question much. They had their parameters for taking a trade. Once they were met, they traded, period, without thinking about much. Now, I'm not suggesting that we should be totally oblivious to everything that's going on around us, but I can also tell you that most people do outthink themselves when it comes to trading. Maybe it's part of a self-protection mechanism that we're all born with to avoid pain and protect ourselves from evil happening, and in the case of trading, that's losing money. So we tend to get very complicated arguments and dialogue going on inside our heads, which usually is very detrimental to our trading health. And I can tell you from my own experience in working with people, the ones that are doing super well have developed a way of doing things and they don't question it. And they develop this attitude and approach to the point where they have tremendous, unstoppable confidence in what they're doing. Losses are irrelevant to them because in their own head, they are successful traders and they have absolutely no doubt about what they're doing. To an outsider, it probably looks like they're really deep thinkers and they have some mystical powers over the market and all this kind of stuff. That's not the case. So the question is, how did they get that way? How can you get that way, or can you get that way? First of all, I'd say that yes, you can get that way. I've seen it over and over again. But there's a few things at work here. First, every single successful person that I've ever worked with was not successful when they started. None of them. But guess what? None of them quit. They refused to quit. And once they found that approach to trading that really resonated with them, they stuck to it like glue. They took the attitude that, hey, you know what? I'll fail my way to success. In other words, they embraced the risk and they were not afraid to fail or to lose to find out the truth. And hey, losing doesn't have to be a big deal, by the way. You can use micro accounts now and learn how to trade properly with the real account, but it's just micro lots, very small. But the other big thing that all of them did is that they did what anybody can do, and that is they didn't reinvent the wheel. Okay, they found someone who was getting the results that they wanted, and they made a study of what that person did. They immersed themselves in an environment that was needed to make a difference. Let me give you a bit of an analogy here. If you wanted to become a really good golfer, you'd go and immerse yourself in a golfing environment where you could find out the technical parts of a golf swing and from a qualified instructor, how to putt, how to read the greens properly, how to approach the game from a course management point of view, all this kind of stuff. Does this make sense? I mean, if you just went out and you read a few books on golf and tried to do it on your own, well, I'm not saying it could never happen, although it'd be pretty amazing that you'd get, really good with it without some help. But you can certainly expect to speed things along big time by finding a proper mentor or proper teachers. So it's the same thing with trading. Put yourself around people who are doing what you want to do and getting the results that you want to get. I love being around other successful traders. I mean, I'm fortunately I'm able to do that all the time in our Coach's Corner, but I learn a lot from them all the time, and I know you can too. The crux of this week's trade lesson is find a simple approach to trading, something that resonates with you, and you can find this through a qualified mentor. And don't overthink what you're doing. Commit to trading it. Allow yourself to, excuse me, to fail, quote unquote fail, to find out. This is what the successful traders that I know have done, and they didn't quit. So I'll leave you with those thoughts. And I hope that you guys have a great weekend, and I'll see you at the end of next week. Okay? All the best. Take care.